All right, I'm back. Okay, I know that I'm trying to be more consistent with the market updates, but I'm trying my best right now. Business is really starting to get a little bit busy for me. And at the same time, I think, I still have some personal matters at home that I have to tend to. So hopefully you guys understand. But anyway, I'm trying to get into some market updates. I'll do a quick video for you guys, so stay tuned. Right, first thing, let's talk about Trump and Xi Jinping going through with the whole trade deal, right? The trade deal is basically talked about how we probably would see the end of the tunnel. Chances are we probably will get a deal with China, but tariffs are still going to be relatively high, even though the trade deal is done. I'm not sure why Trump thinks that that is a good deal, because he's basically taking a 55% tariff while he's charging a 10% tariff onto China. But whatever the case may be, the taco trade seems to still be relatively ongoing at the moment. Markets generally are still approaching relatively near all-time highs. The SPY is bridging around the 600, along the 6,000 line at the moment for the S&P. And I think we are most likely going to be seeing all-time highs getting hit very, very soon. Even though some people would say that, I don't think that we are in this great environment to be continuously buying into this economy. Honestly, I'm not very sure myself. I think a lot of people are thinking that it could also be that people are just being greedy, right? Because if you actually look at Bitcoin, right, as of today, right now is the 12th of June, 8 p.m. in Singapore, right? Bitcoin is doing 107,000 United States dollars, right? So Bitcoin is generally doing pretty well, and even with the crypto market doing relatively well, that's kind of a signal for how much greed is in the market. That's kind of how I usually see it. But I also understand that people are starting to not see it as it is, because crypto as a whole is starting to become more of a safer asset. Surprising, okay? I'm sure it's going to be surprising, because in 2022, if you tell me that like Bitcoin is a safe asset, people are going to laugh you out of the room, right? But in today's time, Bitcoin being at $107,000 per Bitcoin is pretty strong. They have been holding above 6 digits for the last 30 days, which is a new record for Bitcoin as well. And on top of that, let's not forget the failure of the United States dollar is showing, right? The US dollar is crumbling and it is starting to show. We are seeing the US dollar continuously going down, with bond yields continuously finding new highs, right? Like I said in my previous video, the US exceptionalism is ending. Everything is creating higher bond yields, hence crashing the dollar. Of course, with multiple moves from the president, it does affect the dollar in the short term, but it is what it is. Now, let's talk about inflation, right? CPI just dropped yesterday, and a lot of people probably think that inflation reports are going to be very important. If you are a fan of my channel, or if you've watched my channel and went through some of the content that I've been going through when I was creating videos back in 2020, 2021, 2022, you can tell that I went through a lot of CPI reports, right? So I went through almost every single CPI report in 2021 to 2023, if I'm not mistaken. And at that time, right, inflation is a very big thing, because inflation in the United States went up all the way to 9% per month at one point. See, but the issue now is that inflation is not exactly a huge problem, right? Because the issue with inflation is that it just shows that you have rising prices. It doesn't shows it doesn't show that prices are high effectively. I'm not sure if that makes sense to you, right? Yeah, showing the process of prices going up. So when there's no more inflation, it's not as if the prices are not high, right? Prices of a lot of consumer goods have ticked up about 40 to even 80% for a lot of goods from 2020 to 2025. So clearly you can see that the inflation has really left a huge mark in a lot of consumer goods. So of course today when you see inflation at 2.4% year over year, you think, that's basically together, in line with whatever the Federal Reserve wishes for, 2% year over year, right? But the issue is prices are still pretty high. And I think that's equally felt across the globe, right? It doesn't matter if you're in the United States, in Singapore, in Malaysia, in Canada, in the United Kingdom, whatever it is, inflation, you felt it, right? You felt it in cars, you felt it in food prices, groceries, you felt it in rent, you felt it in every single sector. Okay. So because of that, well, I mean, other than wages, wages kind of went up like about 20% since 2020, while consumer prices went up about 40%. So of course, that's another issue. So yeah, I think inflation is not really that big of an issue for people to worry about anymore as of now, I think, right? People shouldn't be too concerned about inflation right now at 2%. It's fine. Inflation is going to stay as it is. Whatever CPI is going to be coming out in the following months probably wouldn't even matter too much to anyone. That's what I believe. Okay, so let's talk about the overall market at the moment. I think it's pretty volatile, right? I talked about it in my last video as well. I'll link it somewhere up here, up there. I don't know. Right, I'll link it somewhere there. I talked about how a lot of companies right now are overvalued, right? So I was doing a little bit of research in the last few days, right? And I was looking at some names, like for example, Palantir. I posted it on my Instagram as well, link down below. I posted it on Moomoo, which I'm also a creator on Moomoo as well. Hey, look at that, Moomoo. But anyway, I talked about Palantir a little bit. I was talking about the PE value, right? Of how Palantir, I think, is a very, really overvalued stock. Okay? And personally, honestly, if you just look back at my video when I was talking in 2021, right? I was telling people, just buy Palantir. Palantir is a good company. I like Palantir. I like the business model. This was before AI was even that huge of a thing, right? I liked Palantir when the foundry was a thing. Like, I was bullish on Palantir when Palantir was, like $12. And then when it went down to like $6, I was like, Palantir is a pretty good stock, right? Albeit, I did sell my Palantir at about $40. Okay, I know, maybe I'm a little bit salty about it. I don't know, right? But I made some good money from Palantir, but that's besides the point. But right now, I'm back in allocation mode for my stocks portfolio, and I'm thinking, right? Do I want Palantir in my portfolio? I do. I think Palantir holds a interesting position in my portfolio if I were to hold Palantir. The reason being is that Palantir has a good mix of AI and at the same time safe consumption in terms of how the indexes work. Because if I were to go full bullish, I would just go fully just having a huge percentage in Nvidia and just a lot of chip sector, right? Things that I really am confident in. But the thing is, I believe that the recession would most likely be coming really soon. As I have talked about in multiple occasions, even some people who even DM me on Instagram asked me about it. The recession is clearly long overdue. We are supposed to be getting a recession in 2018. We saw a little bit of a correction in 2020 due to COVID. Basically, the recession was postponed because it wasn't caused by an economic meltdown. Instead, it was saved by an economic melt up when the stimulus came in, the whole Shibuya, you know it, right? And then when 2022 came with very high inflation, right? 9% month over month or something stupid. No, sorry, 9% year over year. Shish, 9% month over month is crazy. Yeah, 9% year over year, right? When we saw inflation at that crazy level as it is, that really pushed all the stocks down, right? You really saw all the American stocks basically went for its all-time low, right? You look at Palantir back there. You probably saw $6. You probably saw $8, things like that. When you look at Tesla, minus all the splits that they have been doing in the last 4 years, in 2022 you probably saw a few $30 to $40 Tesla shares back then as well. So 2022, when the Feds were aggressively raising rates, for a fact that the stock market is getting hit. So yeah. So I think that recession as a whole right now, it is overdue, of course. And right now, the very, very looming and obvious issue that we all can see is probably the debt crisis, right? I talked about the debt crisis when Janet Yellen was trying to raise the debt ceiling in 2021, 2022, 2023, right? Doesn't matter. It all doesn't matter at all, right? Because the issue is that the debt crisis is back again. We're close to $40 trillion in debt. Most of the debt that we have at the moment for the US is all created in the last decade, right? So clearly something is wrong in the market, and I'm thinking, if everyone is still so confident, could it also be that this confidence is misguided, or is it actually being shrouded by complacency? That's my issue, right? The thing is that when you hear a lot of people keep on calling wolf, for example, you see Jamie Dimon, you see Robert Kiyosaki, all of them, they like to say, the market is going down, the market is, the recession is coming soon, the recession is going to come in 6 months, it's going to come in a year. And I think, a broken clock is going to be right twice a day. And they have been talking about how the recession is going to be crashing down on us for 5 years, 6 years. And I'm starting to think that maybe the market might be a little bit too lofty at the moment. I think a lot of valuation is really, really misplaced. And someone actually on Moomoo commented on a post where I was being interviewed by Moomoo, right? And they were basically asking that, do you think that index ETFs are being overly bought due to the fact that it is such a passive investment that everybody subscribe to, and that's why it's going to decouple the value from the actual underlying stocks for the index? So for example, for the SPY, right, let's just use Apple for example. Apple is a bad example, right? Because Apple is dropping the P horribly. Apple is doing relatively badly as compared to the other Mac 7 rivals that Apple have. But let's call Tesla, right? Okay, if Tesla right now the P value is about 200, right? Which is not really good. That's really, really overvalued as of now. But that's besides the point. If you're talking about the SPY at the moment, that people are thinking that, if people are constantly just buying the dip, people are constantly, dollar cost averaging into the index, people do not care, and they constantly buy into your SPY, buy into your VOO, buy into whatever S&P mirroring ETFs out there, and they're just constantly piling into all these different stocks, into these different ETFs that is supporting, having this indirect support for Teslas or all the other overvalued stocks out there. Would it also then trigger this kind of thinking that maybe everything is just being overbought, right? People who are constantly buying into the ETFs do not know about the true value of stocks. Okay, I would say a good 50% to even 80% of the people who are buying passively into ETFs, you have to understand there are money market funds, there are insurance companies, there are pension funds, there are just people, normal retail investors like you and I, who are constantly buying into the S&P 500, thinking that, the index is good. We're going to just keep on putting money into the index, And I think that is a possible outcome as well, right? So there's a good 50 to 80% of the people who are probably buying into the index without knowing the true value of stocks. And the index is a relatively simple instrument, right? They just put up the 500 companies who are doing really well in the tech sector, and effectively they just kind of bundle them up in there, and they have changes every single quarter to pull out the weaker companies and putting in the stronger companies, which is why S&P generally is a good index to buy, because it is a self-fulfilling, self-filtering financial instrument. So I completely get that. But the problem is when you have overvalued stocks inside this ETF, will this self-fulfilling, self-filtering financial instrument be able to tell apart from the Apples and the Teslas? Because Apple at the moment, the P value is actually not that high, right? Right now I'm just looking at it. The P value for trailing 12 months, right? At the moment for Apple is 31, like 31 times. It's not really that high, right? As compared to what Tesla is at the moment. Tesla, the PE for trailing 12 months is 179. So clearly something is really, really decoupled, right? We're talking about what, like 4 times, like 5 times, easy 5 times, right? So something is wrong, I feel. I think something is fundamentally wrong at the moment. And if something is fundamentally wrong at the moment, something has to give. And I don't want to be there when it all crumbled down. But at the same time, I don't think I'm that comfortable with shorting the market or buying puts on the market. I don't think I'm really, really comfortable with that at the moment, simply because I think I might be way too early on this. There's a good possibility that the market don't even fall all the way to 2028. The market might only fall when Jerome Powell passes the torch over to Besson. That's a possibility, right? And also something I talked about on my Instagram as well, which is like, if Besson were to take over from Powell in 2026, May of 2026, chances are what's going to happen is that Besson's going to probably just cut the rates down significantly, right? According to what Trump wants. Of course, that's also provided that Powell keeps the rates that high generally, but I highly doubt it. I think Powell is probably going to be cutting in the next 2 meetings. I think he's going to be forced to at least cut a 25 basis point. Not really expecting a 1 full point like what Donald Trump is talking about, but whatever the case may be, I think if Jerome Powell continues to keep rates relatively higher for longer, even moving into 2026 with such high rates, when Scott Besson take over, I have a strong feeling what's going to happen is that Besson is going to cut interest rates by 1% or even more, right? Simply because he wants to lower the debt for America, or for Donald Trump at this point, right? Because the issue is that the debt repayment at the moment is ridiculous, right? With the amount of debt that US have at the moment, they are paying so much money to Japan, they're paying so much money to China, and of course to the Feds as well, but that's besides the point. So all this debt is going to effectively be passed over. And I think if the market can handle itself until the May of 2026, hallelujah, we're good. We made it. However, if the market does not bear with the consequences until May of 2026, before Scott Besson comes in, and if Jerome Powell is adamant on continue keeping rates higher for longer, I don't know. I think a recession might actually come. So that's why I think right now I just want to stay on the sidelines. I think the market is frothy. I don't dare to short it either, because the thing is that people are greedy, right? People are so greedy. And I get it, okay? I'm greedy as well, okay? Like, looking at how everything is going up, it makes me want to enter the market and just try to catch a bit of that highs. Maybe catch that the upper 10% run up, maybe. But I don't want it when it fall and then I'm like forced to continuously dollar cost average into a falling market. That's one of the worst thing that I probably can do. So yeah, I think right now the market is in a very, very weird place, right? We are near all-time high, and we still have so many headwinds, right? Trump is a huge headwind. The debt crisis is a huge headwind. Whatever's happening in China is a huge headwind. Even the recent plane crash in India with the Air India that was London bound is a huge headwind. I think a lot of things right now in the market causes this uncertainty for a lot of investors. And I think personally right now, because I am in allocation mode, nothing is really on sale. I don't see any stocks being dirt cheap where I really, really want to get into. There is an ETF that I'm really, really interested in, which I think I might cover more on that ETF in the future if you guys are interested in. You get great dividends. You get like what, 8% dividend. There are some downsides, but I just thought that it was great, and you get a payout every single month. It's insane, I feel. But I'm reading up a little bit more about it, so that I kind of understand the ETF more, and then I kind of just explain it to my friends and family to see if they're interested in such a vehicle, right? So yeah, honestly, that's my current market update. A little bit short, a little bit long. I don't know if this is something that you guys like. Just me rambling on and on. But yeah, I think it's gonna be a pretty interesting 3 months to a year right now, until May of 2026. I think that's when we are going to see a lot of changes, be it to the upside or to the downside. So yeah, whatever it may be, I hope you guys invest safe. And also, if you're Singaporean, okay, which I'm not sure what percentage of my viewers are Singaporean, but if you're a Singaporean, Moomoo is having the MOOFEST 2025 on the 13th of July, 18th of July. I'm not very sure. I'm going to leave the information down below. Okay, if you're interested, you can get some free tickets. I'll be speaking in the event as well. I'll be giving some tips and tricks to what you can do on the Moomoo app as well. So if you're interested in that, grab your free tickets down below. Anyway, thank you guys so much for watching, and I'll see you guys in the next one. Peace out.